It's a little before 8 p.m. on Thursday, March 14th. Not a whole lot of activity in the major averages during the day today. As you see, volatility is still dropping, although that upside divergence on the daily chart is present. Those of you who are looking to trade short-term options know full well what I've been explaining, that the direction is about as important as the divergence itself. So you can't fight the direction or the divergence. So the divergence may be present, but it needs to get into the mode of turning into the direction of the divergence as well. So if that's not happening with a great deal of vigor, then opportunities are lackluster. You see the volatility during the day today made some half-hearted attempts to turn higher and things like that. But today is not an expiration day, so it's not going to do too much as far as options generation. You see that on the 5-minute chart here around 1 o'clock, and the price that after having hit the same lows at around noon, moved up, and came back down to the same level at 1 o'clock and left a technical picture higher. So at 1 o'clock, if you're going to do anything, then that would, signal some sell-off in the SPY. But a 5-minute chart, let me see here, on a Thursday afternoon, no. How about no? How about just going back to sleep and forgetting about trading today? Because it's not an expiration day. The 5-minute chart doesn't have enough vigor to generate too much on a day that's not an expiration. So how about just stay away from it? That sounds like a good approach. Some people who want to trade all the time just don't seem to understand that. They think that every minute of every day seemingly creates an opportunity for them, but that's not right. Not if you're looking at just a handful of major indexes and things like that to confirm. It may be true that some individual components somewhere, like these Dow 30 stocks or something like that, may have a high enough time frame to justify some of your attention. If you'd been doing the thing that I've been explaining for so long and just stay with that approach, look at higher time frames, hourly, 2-hour, daily charts, whatever like that. Just go down to this list and start at the daily, run down the list, then go to the 4-hour, the 2-hour, the 1 hour, 30-minute, 15-minute, so on and so forth like that. Unless you see something on one of the higher time frames, you don't need to go to the lower time frames then. You look for the divergent patterns that stand out. You don't have to scratch your head, try to figure out anything. Like United Healthcare as an example, it's an hourly chart and probably higher than that had distinctive forces present, see, back at the beginning of the week. See, the price was the same lows, or very close to the same lows, but the technical bottom on the 2-hour chart was nowhere near the same lows as it was before, see? The price was, but not the technical force against the price. It was climbing out fairly dramatically. The price at that time was around 235, as you can see, and now it's over 255 that it went to today. So that's a $20 move in just the last few days. That will generate some longevity on the move and give even the people who are trading with brokers like options trading on Robinhood, for instance, they don't like you to trade options on the expiration days and things like that, like buy them and then sell them. You can day trade, but not buying and selling on the same day. They seem to have a restriction on that, but you can buy them like this. You can buy them on Monday, sell them on Thursday or Friday. That's not a problem. So, deal with the instrument and the broker that you have or whatever their restrictions, and just work around it. It's easy to do. You just have to see a higher time frame and not worry about trading 5-minute charts on expiration day when you have restrictions from the brokers like that. Or find a broker that charges a lot more commission and you can trade on expiration day. But anyway, looking for good chart patterns. Like I said, that was a good one. Procter & Gamble is also a very nice 2-hour chart pattern, and this was last Friday. Very distinctive picture. The price at the time was under 98, and you see now it's moved, up to around 102. So may not seem much to people that are not in the know on options trading, but that kind of thing like that will easily produce many hundreds of percent return easily. That's a word you should like to hear when you're trading leveraged instruments, that it's easy to find a pattern. See? So there's two at least right there, Procter & Gamble and United Technologies or whatever it is, or United Healthcare. So United Healthcare and Procter & Gamble both had very nice patterns on the Dow 30, either late last week or early this week, and have allowed for good returns for the right reasons. So let me see. Now that we're upon expiration, now you can look at lower time frame, like 10-minute charts. Look to the same list. If you don't see what you're looking for on the major indexes, then you look like this. Just go down the list right here. Look for the same kind of pattern that just showed up on the 2-hour chart late last week and early this week on Procter & Gamble and United Healthcare. You're looking for the same pattern, but a different time frame, and it could be on a different ticker symbol. What's the big deal? Different day, different symbol, different time frame, same pattern. The pattern remains constant. We're always looking for the same features. It doesn't matter that it's a different day or it's a different stock or whatever. That doesn't mean a thing. Shouldn't mean anything to you either. Just if there were 10,000 stocks to look through and you only needed to find one, well, do it. Let's see, here's a Travelers Group. This is during the day today. So see what I'm saying? 10-minute chart. Travelers had a price of 132 something there, upside divergence there. So that's the kind of pattern we're looking for near the end of a trading week for options that expire the next day. So that type of technical picture. All you have to do is take a look at the options that trade on those things to see if they are cheap enough based on the proximity to the next strike price and so on and so forth. A very simple thing to do. So you look at the Travelers Group, ticker symbol TRV, look at the options. That would be, are they available every dollar, or is it every 250? Are they available every 50 cents? That's what I mean about getting to know your instrument, because if you've never traded any options on Travelers Group, then you need to know those things. So you look at your options chain, and it says, oh, there's a 132, there's a 133, or there's a 132, a 132 and a half, a 133, a 133 and a half. Then you'll see if it's every 50 cents, or if it's every dollar, or if the next strike price up from 132 and a half is 135, then that would mean it would probably be too far away based on this chart pattern that expires tomorrow to waste your time or your money on it. See, so it's a very simple procedure, and you follow the same rules all the time. Never changes. Always baffles me when people keep thinking, well, there's so many things going on. No, they're really not. We're looking for the same patterns over and over. Seems like a lot to people who are uninitiated in the simplicity of the pattern um, that we're looking for. Just and they assume there's more complexity to it than there actually is. So it's not a complicated thing. It's a very simple thing. So anyway, hopefully everybody understands that. And if you do, you'll be able to make money. If you don't, see if you can find a second or third job because options trading is not for you. Anyway, talk to you tomorrow.